And welcome, folks, to the top of the hour. Once again, I'm Mark Johnston, your host for VID5, our conference sponsored by our friends at Laurentian Bank Securities. And we have our next guest ready to go here. We have the privilege of welcoming Keyvan Salehi, who is the president and CEO of Nighthawk Gold Corporation. Keyvan, thank you so much for joining us.
Thanks for having me. It's a pleasure to be here. I appreciate it. Thank you.
Thank you. Thank you. We're excited because you're one of the rare guests that has shown up with some great content for us to launch into the session. So you and I will go off camera because I understand we have a great overview of the company for Nighthawk Gold Corporation. So off you go. And then I know that I'll join you at the end for some Q&A.
Finding gold is not an easy feat, but the rewards can be huge and long-lasting. We started in 2008 with one small high-grade asset and quickly realized the vast potential of this large yet underexplored Archean gold camp. Nighthawk then embarked on a consolidation strategy which resulted in the creation of a district-scale land position on fertile ground with lots of room to explore. Over the next decade, we set out to grow our resources and find new discoveries. This year, we've embarked on one of the largest drill campaigns in Nighthawk's history, where we anticipate completing upwards of 200,000 meters of drilling over the next 2 years. Backed by supportive shareholders and strategic partners, we are fully funded to achieve our near-term goals. Our aggressive and dynamic approach will allow us to take Nighthawk to the next level.
Hey guys, I hope everybody's doing well. I'm super pumped to be here for the first time to share the Nighthawk Gold story with you guys. It's our first time, as I said before, attending the VID conference. So I want to thank all the sponsors, including Laurentian Bank Securities, for accommodating and facilitating this for us. So without any further ado and delay, I'll jump right into the story. I feel like that video kind of stole the limelight from some of the stuff that I was going to go into, but we'll obviously do a deeper dive into our company, our project, what we've done so far this year, and what we're looking at building over the next few years. Nighthawk Gold trades on the Toronto Stock Exchange under the ticker symbol NHK. You can also find us on the OTCQX with the symbol MIMZF. Before I go into the slides, just this first slide, the background is actually an aerial photo of our campsite. This picture was taken about 4 or 5 years ago, so there has been some changes. If I can just move this around a bit. Sorry, guys, just a bit of technical difficulty here. Yeah, before I kind of jump into the story, just a quick reminder to have a look at the forward-looking information and also the technical disclosure regarding the content that's in this presentation. So the Nighthawk Gold story began with the acquisition of COLOMAC back in 2008-09. COLOMAC is our core asset. It was site to a past producing operation in the early 90s. Royal Oak was the company that operated the mine. About 500,000 ounces of gold was mined and recovered from COLOMAC back in the 90s at an average mill head grade of 1.7 via open pit operations. So there is history of mining within our core asset. And over the past 10 years or so, a very large land position has been built up around COLOMAC. It's about 1,000 square kilometers of highly prospective ground in the Northwest Territories. I probably should have started by telling you that our property is located in the Northwest Territories. COLOMAC is about 200 kilometers north of Yellowknife. We are in a great tier 1 jurisdiction from a mining perspective. Oftentimes when I talk to people, although Yellowknife and Northwest Territories has seen a lot of mining activity in the past, over the past 2-3 decades, the gold and precious metal space hasn't seen a lot of activity. It's primarily been focused around the North American diamond exploration and development and production stories. So in terms of Yellowknife being a mining hub, all the technical expertise, all the supply chain, all the essential things that you would need to start either exploring or further along the food chain in terms of development or running an operation, all those ingredients are there. Some of the dots that you see on the left-hand map from Akadi down to Diavik, Gachikoy, Snap Lake, those are those big diamond mines that have been discovered and developed over the past 2-3 decades, and a couple of them are still being currently operated with by some of the major mining companies like Rio and Anglo American. As I said before, it is a great jurisdiction in terms of mining. We think that there's a lot more upside in terms of where we are with respect to the Northwest Territories. There's a lot of room for upside in terms of exploration and additional discoveries, not just in the diamond space or precious metal space, but across all commodities. This is an area that essentially has not been the surface has been barely scratched in terms of how much exploration can be done in the Northwest Territories. The local governments from GNWT, Government of Northwest Territories, federal government, all the local communities and the indigenous governments and communities, they are very supportive of mining and exploration in this area. They understand that it's a large part of their economy, so they're very they are very promotional when it comes to attracting additional capital from the private sector to enhance exploration and increase activity in the area. And they're backing that up by a lot of capital and money that they're putting into the ground in the form of infrastructure. And some of the key things that you'd want to see from a mining perspective in terms of the remoteness of the area is providing all-season access or highways to some of these properties like ours. Power is a big one, and telecommunications. On the right-hand side map, if I bring your attention to that kind of bold black line, and that's an all-season highway that has just been completed as of last week. Actually, it had been constructed over the past 2-3 years. That's an all-season highway, Highway 9 to Lecho Highway, that will connect the community of Wati to Yellowknife. And you can see that in relation to our property, that essentially gets us to about halfway to our property. The green lines on that map represent ice roads that get built during the colder winter months of the year, and that's been kind of the primary route of access for some of whether it's the diamond mines in the Akadi and Diavik and Gachikoy, or even our property. We haven't used the ice roads in the past on our property to bring material and fuel up, but we intend on using that this year once we have all our permits in place. But I think the key takeaway from this is that we are looking forward to working with all the local governments and stakeholders to further enhance and provide additional opportunities in terms of infrastructure, be it all-season highways and extending the power grid and telecommunications, not just for our operation, primarily for the communities that live and reside in these areas, with obviously benefits to companies like Nighthawk, who can obviously further enhance and advance their projects further into the future. So we'll continuously work with all the local governments and all the stakeholders, and that's something that actually we do. We have regular dialogue with a lot of the stakeholders and make sure that they are up to speed in terms of what we're doing with our property and how our project is advancing in terms of exploration and resource expansion and economics and all the things that we want to do. A few changes this year. I joined the company back in January of this year. As I said before, the Nighthawk gold story has been around for a few years, a decade or so. But late last year, the company decided that they wanted to accelerate and expedite the advance of the project towards a PEA. Having been around for so many years, I think it was the right time. So luckily, I was the one that was chosen for the role. And along with me, we also hired a new vice president of exploration, both of us having replaced Dr. Michael Byron, who was the CEO and also the top geo for the company. So very big shoes to fill. I think Dr. Byron did a phenomenal job of getting the asset from an exploration point of view to where it sits at today. For me, sometimes when I get asked the question, although we're exploration company, it's the way I think about it is exploration plus engineering. We are an exploration plus engineering story. We come from a mine building background. I have spent most of my career in gold, primarily working for companies that had operations or were development projects that eventually became commercial, that eventually reached commercial production. And our vice president of exploration as well, Richard, he comes to us from Semafo. He played a big role in taking that company from where they were 10-15 years ago until to the point where Endeavour bought them, and they had by that time they had reached commercial production. They had a phenomenal asset in Africa. So we come from a mine building background. That's what our intention here is, right? We want to advance this project further. we understand that we're still small. We have a small market cap of 60 million, so we are aware of that. But that's how mining works, right? So you start small and you incrementally improve and enhance where you're sitting at today, and slowly move the project further along the food chain. And that's what we're trying to do. I think, as I said before, with everything that we've looked at in the past year or so, a natural milestone, a key milestone for us in the short term is delivering a PEA to the market. And that's something that I guess I get asked a lot about, Nighthawk Gold story, given that the company has been around for quite a few years. Like, people ask me, well, how does your project look like from a mining perspective? How do you mine it? How many ounces per year? What's the cash cost? All those things. And all those questions can be answered with a PEA that shows the concept that we're working with, and also the economics and what this looks like from a mining perspective. And in order to supplement that, we didn't want to take another 10 years to do this, so we announced a very aggressive 2-year, 200,000 meter drill program. And we also shifted a bit of strategy in terms of making sure that we focused on looking for near surface, higher grade, open pitable mineralization or resources further down the road. That could be the driving engine to deliver this PEA over a 2.5 year period. Sorry, guys. These slides are moving on me. Okay, here we go. This is where I wanted to stay. Perfect. Okay, just to kind of do a little bit of a deeper dive into the 2-year program. At the start of the year, we announced a 200,000 meter drill program. The way we split that up was 70,000 to 75,000 meters of drilling in 2021, with the additional 100,000 to 125,000 meters of drilling to happen next year in 2022. We've just finished our 2021 campaign. I probably should have mentioned that given where we are, we do a lot of our drilling during the summer months, so anywhere between early to mid-March to mid to late October, again, depending on weather and also daylight and how much daylight we have during those months. But generally, we're drilling in the summer months. So, as of, late October of this year, we've just closed up our camp. So we're now in the quieter period of the winter months. We pulled about 72,500 meters of core out of the ground this year. That is our largest program to date by Nighthawk, and it's nearly double the amount that had been done prior to myself taking over as president CEO. So it's been a great year from an operational perspective, and being able to almost double up the program in our first year. I think that was a pretty big achievement, considering that where we are, and there's some logistics to deal with to kind of ramp up operations and exploration to that extent. So I'm very proud of that, and I'm very thankful to my entire team and everybody, all our partners, all our contractors, and everybody that basically contributed to our success operationally this year. In terms of drilling, we allotted about 60% of our that 72,500 meter program to known targets in order to expand resources, with the remaining 40% to focus on really grassroots exploration stuff, to look for some of those additional discoveries, to make sure that we build up the project pipeline over the next 3-4 years. So another 100,000 to 125,000 meters of drilling to come in 2022. We're still getting, as I'm sure a lot of other issuers like us would have told you guys, we're still waiting for a lot of assays to come back. COVID has played a part in terms of causing a lot of delays in getting results and assays back. As we get those results back, we'll obviously consolidate all of that. We will come out with a new resource estimate at the end of this year, which will be public in Q1 of next year. And as we get more of that data coming back to us, we'll start looking at the detailed program for 2022 before we open up our camp in late February to early March. So if I kind of take a step back and look at the history of the company, between 2010 and 2020, as I said before, about 185,000 meters of drilling has been done on our property. Majority of that drilling was done on our core asset, COLOMAC, and we can go into a little bit more detail in terms of what that looks like and where some of that drilling was done. What that has gotten us is today's global resource base of just around 3 million ounces. And the way that resource is split up is about a third of that is 1 million ounces of 1.63 gram per ton open pit, with the remaining 2 million ounces of 2 gram per ton underground resources. I should also highlight that a large part of our resource, about 65, close to 70% of our global resource base, is in the indicated category, so higher confidence in terms of resource classification. So that's a really good starting point for us and the team as we start, moving this project further towards advance and development. Our near-term 2-year strategy and focus has really been to grow that open pit part of the resource significantly. And that's essentially been the focal point of the work that we've done this year and will continue to do next year. We, on average, the holes that we drilled in 2021 were down to about 180, 200 meters vertically. We didn't do any deep drilling, but perhaps a couple of holes here and there just to further test the extent of some of the mineralization that we were curious about. But for the most part, 95% of drilling that we did in 2021 was near surface shallow drilling with the intention of trying to grow that open pit part of the resource significantly. We are targeting, and again, going back to that PEA concept, we've kind of stepped out 2.5 years from now, and based on all the work that we've done, all the evaluation and the research that we've done on our property in a realistic scenario, and obviously a conservative scenario as well, we've kind of stepped out and looked at what we believe our project can deliver, and we're essentially trying to reverse engineer it, making sure that we deliver a PEA that's large enough that kind of moves the needle for all our stakeholders, from our shareholders all the way down to the local governments, federal government in terms of taxes and royalties, and also, and most importantly, all our local communities in the form of jobs and enhancing the communities that we could potentially impact in the future. So that's kind of been the focal point of that's how we've kind of come up with the minimum threshold in terms of resources, open pit resources and ounces that we're looking for. And that number for us, we believe, is a minimum 2.5 million ounces of 2 gram per ton material. And now, as we go through the exploration targets, I can show you where I think some of these additional ounces are coming from, and also the higher grade material is coming from. And if I kind of look at what we've done so far this year and look at the results that have come back and kind of do a projection of some of the assays and the results that are still pending, we're fairly confident that we will have significantly increased the open pit part of our existing resource by the end of this year when we publish our new mineral resource estimate in Q1 of next year. I believe the number of 1.7 million ounces of open pit when we publish our MRE in Q1 of next year is very achievable based on what we've seen so far and what we think is going to be coming back over the next few weeks in terms of assays and results, which gets us, basically a lot closer to that minimum 2.5 million ounce threshold that we're looking for. And then in terms of grade, this is something that I have talked about this previously with a lot of other investors in the market and some of the interviews I've done. But when I joined the story, a lot of people ask me, well, you have a lower grade underground story in the middle of the Arctic. How do you build it? What does it look like? What are the economics of this? Although if you look at the current resource today, that is true. I think it's a bit of a misconception. I think the current resource is really a snapshot and derivative of what the drilling allocation, capital allocation in terms of where the drilling was done in the past. So in the past, the main trend at COLOMAC was identified, discovered, and further expanded both at surface and also at depth. What we did this year, we kind of took a step back and look at the entire property, and we'll go through that together in detail. But I think the key takeaway from this is that, we think that the opportunity for us to become a higher grade open pit development project in North America is very achievable. And, we can go through some of the targets and the details of what our property shows in terms of targets and additional mineral resource expansion across the entire property. So here you're basically seeing there's a peer group comparison of our project, just the open pit part of the project in terms of grade, with respect to some of the other open pit development projects in North America. The weighted average of the group is about 1.4 gram per ton head grade. You can see our open pit resource grade of 1.63 is slightly above the weighted average of group, and with our target of 2 gram per ton, which we believe is very achievable, you can see that we start moving very rapidly towards the left-hand side of this chart, which is where some of the higher grade open pit development projects are. We do get a lot of comparison to the Marathon Gold project, and primarily mostly the trajectory that company has been on over the past 2-3 years and how they turned their story around. And I like that comparison. I really like that project. I like that management team. I also go a little bit beyond that and say that, well, I think the size of our land position, the grade of our project, and the potential to become a multi-million ounce resource over the next 4 or 5 years actually kind of gives us a bit of an edge over Marathon Gold. But given where we are today, I'm more than happy to take that comparison and eventually over the next year and a half to be on that trajectory if that works for us. And kind of thinking out over a longer term period as to what we envision and how we think about further advancing this project along the food chain and the timeline. The PEA, again, I've touched on that already, but I think that's a really important milestone because on the time scale, if I consider the PEA, times 0, that kind of propels us into starting to look at our social license, our permitting requirements in terms of doing environmental assessments and environmental impact assessment that we have to do to really start permitting our project towards construction, eventually commercial production. From the time of the PEA, we envision anywhere from 2.5 years, maybe 3 years to get to feasibility, during which time we will have obviously continued to expand and grow our existing resources. And then once we get to a feasibility stage, another 12 to 18 months to reach construction. And, this is very similar in nature to some of the other timelines, not just in Northwest Territories, but in Canada. It generally takes anywhere from 2.5, 3 to 4 years to fully permit a project before you can actually put shovel into the ground and begin construction. So that's what we see. And that's why it goes back to the fact that the PEA is that much more important when we think about how we can advance this project further. So everything that we've done this year and we'll be doing between now and end of next year is to try and accelerate and expedite to get to that PEA as fast as we can, making sure that we hit some of our own internal targets in terms of the economics and the size and scale of the project and concept that we want to deliver to the market as well. And something that's I think is really important this year, I came into the story on the back of companies like Northfield Capital Corporation and Kinross and Osisko Development as primary shareholders of the company. They're the longer term supportive shareholders. Northfield Capital are the founders of the company. They have been there since day one, and Kinross and Osisko have been involved with the company over the past 5 years or so and have always been supportive of all the exploration and the operations that this company has had to do. This year, we obviously with the new change in management and also the shift in focus and strategy, we raised about $38 million to fund our larger program in 2021. And we grew our institutional ownership from 5% to just over 20%. And that's on the back of some of the larger funds in our industry, like the VanEck, Franklin, and Merck and Rafa joining our story. And I think that was a big accomplishment, achievement for us as a management team. And it's good to know that, when we go to market to raise money, there's a really good starting point in terms of longer term supportive shareholders that we can call upon. We'll probably end the year with about $10 to $11 million of cash on hand. So that's more than enough to kind of see us through the quieter winter months and kind of get us to a point where we can start thinking about logistics and opening up our camp and getting ready to really commence our 2022 drill program in late March, early April. I talked about, there was a picture of our site that I kind of mentioned, but here we are. This is the most recent snapshot or image of our operations at COLOMAC. At the end there, you can see the 5,000-foot airstrip, which we used to bring all our material in. We've added additional core shack to further facilitate the additional drilling that we want to do. We've added additional sleeper tents. By summer of next year, we'll be able to get up to 7 drills. So our permits will allow us to further increase our drilling capacity. I believe we can do about 150,000 meters of drilling in the summer months with the 7 drills. And then we'll also continue to work on our permits and amend them to get up to 10 drills by the start of the 2023 drill campaign that will allow us to get to 200,000 meters of drilling in any given season that we want to get to. So at a very high level so far with all the slides that I've shown you is essentially kind of what we've done at the corporate level and kind of like, the slight change or, strategy and, how we see this project developing over the next 2.5, 3 years with some really near-term catalysts like mineral resource estimate update in Q1 of next year with the potential of doing a PEA another 12 to 14, 15 months down the road from that. So that's kind of the high level where we're at with respect to our project and what we want to do. From this point on, I kind of do a deeper dive in terms of our asset, our property, some of the targets that we've drilled, where the history of the company was, in terms of the drilling that was done, mostly which was around COLOMAC, our core asset, and then some of the targets that we've looked at throughout the 2021 program, and what we could potentially drill in 2022. I kind of said at the start of the presentation that we have a very large land position. To put it in perspective, our property is about 1,000 square kilometers, 60 kilometers long, 20, 30 kilometers wide, highly prospective ground, greenstone belt in an Archean setting. Again, to put it in perspective, I spent a lot of time in the Timmins Gold Camp throughout my career, and our property is nearly 3 times the size of Timmins Gold Camp. And for those of you that may be familiar with that camp, over the past 6-7 decades, about 50 million ounces of gold has been recovered from there. So in terms of size and scale, our property is definitely large enough to justify when we talk about, potentially over the next 4 or 5 years, building out a multi-million ounce resource and deposit. In the middle of the page, and I apologize because I can't seem to access the drawing tools on this slide, but in the middle of the page is COLOMAC Center or COLOMAC Deposit. If you can kind of bring your attention to that middle part of the page there, that's really been the focal point and the epicenter of the work that the company has done in the past. More than 90% of our resources sit in that area. It accounts for about more than 85% of the work and the drilling that the company has done over the past decade or so. That's really been where most of the company's attention has been over the past decade or so. When we came to the story and we started looking at the entire land position, we decided to kind of take a step back, look at the bird's eye view of the entire property, because we saw a lot of opportunity to further expand on the targets that were there, but also look for better grade mineralization in and around the COLOMAC deposit. The concept that we're working towards here is having COLOMAC as kind of the center of gravity, and if you're thinking about it from a mining perspective, it's kind of where you build a mill or a processing plant. And that will be your central milling or processing facility. And then you have a bunch of satellite targets, higher grade, smaller in ounces, but higher grade, more margin, that kind of feed into the central processing facility. So that's the kind of concept that we're playing with here in terms of what we know to date with some of the deposits that have been, or some of the targets, I should say, that have been identified across the entire property. So, without any more delay, let's look at some of these targets. And I'll start with our core asset, COLOMAC, because that's where essentially most of our current global resource base sits. So if I zoom into that middle area at COLOMAC, that the longest red line there, that represents on the map is the main trend at COLOMAC. That accounts for more than 82% of the current global resource base, both open pit and also underground as well. And then you can start seeing that laterally other other red lines that you can see, other trends like the Nice Lake trend to the east of it, and then further to the east, zone 24-27, and then to the southwest you have Grizzly Bear and then GOLDCREST. And these are some of the other targets that we've drilled this year. When we came into this, we saw a lot of opportunity both along strike to the north and south of the main trend at COLOMAC. I guess we kind of call them low-hanging fruit. We thought there was a lot of white space, if you will, that we could do a lot of drilling on and further expand the near-surface open pit mineralization at COLOMAC, both along the main trend and also some of these smaller targets like Grizzly Bear, GOLDCREST, 24-27, and also Nice Lake. You can see that any additional ounces, even if it's small ounces, anywhere from 25 to 100,000 ounces of resources that we can build around the main trend at COLOMAC, given their proximity to the core of the deposit, it further enhances the economics of this project. So that's why we've kind of done some of the drilling that we have done this year. So, again, let's maybe look at that in a little bit more detail. We start with Grizzly Bear, which starts to the southwest of that. Again, these are some of the results that we will have published this year from the drilling that we did on Grizzly Bear. Near 3 gram stuff, over 10-meter core length. 4.64 over 6.1. These are the kind of things that we've seen in the past in terms of the drilling that was on Grizzly Bear. This is what we consider, although they're not spectacular intersects, we call them kind of slow and steady and resource addition type of drilling. What we see is a lot of consistency on repetition in terms of the drilling that we do to further expand resources along these trends that have been well identified and have really been well established. So here at the main COLOMAC, these are the latest results that we would have published from the main trend at COLOMAC. Again, very typical COLOMAC-like intersects in terms of core length and also grade. Again, it goes back to my original point about the fact that although there are some higher grade pockets within the resource, what we see is a lot of kind of slow and steady resource expansion along the main trend, both to the north and south of the deposit. And then GOLDCREST. GOLDCREST is a bit of an interesting one. We actually, this year, with some of the drilling that we did further below the existing pit shells from the last resource update, we actually saw, we see a higher grade shoot. So this is an area where we actually think that there is potential further down the road for even a higher grade underground kind of scenario. I mean, that's still very early on. This is just some of the drilling that we've done this year, but 6.36 over 11 meters, that is very typical of a really good underground kind of deposit on the back of an existing pit that has already been established and will continue to grow as well with the drilling that we've done this year. So we're starting to see really interesting stuff happening, not just within the open pit part of the project, but also at depth. That's something that, I guess that's a good point. This is a good point to talk about the underground part of the story. We haven't really touched on that this year with a lot of the marketing that we've done. We've tried to focus on, the open pit part of the resource, but something that we'll probably talk about a lot more as we go into 2022, in that most of the targets and the mineralization resources that we have on our property, they either start at surface or near surface, and nothing suggests that they stop at depth. So for the most part, we're looking at open pit type of projects if the mineralization and economics and resources are there, with the further potential to expand on the underground part of the story as well. And finally, within the COLOMAC Center, going further to the east there, that 2427 deposit that I mentioned, we actually didn't, this has been an area of surprise for us. We wanted to do a little bit of drilling on this because we thought that it kind of killed it off, but we actually managed to double the strike length to the northwest of this. And you can see some of the results from this year's program. This is actually, the grades, actually the intersects that you see here is better than what we had seen in the past. So to the north, not only the grade improved, but also, as I said before, the strike length was extended, and it's still open to the north. So this is an area that we're, and we ran out of time this year. So this is an area that we're going to go back into next year as well, and continue drilling this within the COLOMAC deposit or COLOMAC Center itself. So that's kind of the story within that core asset, COLOMAC. We talked about adding additional ounces, stepping out of COLOMAC, looking at the entire property and looking for higher grade near surface mineralization within a 15-20 kilometer radius of COLOMAC. The most important one of those targets is the Kimcast deposit. On the image there, you can see a white dashed line. That's a road that takes Kimcast deposit to our camp and the COLOMAC deposit. This is a historical resource that was identified in the past. Very shallow drilling down to about 80-100 meters vertically. It was a non-compliant resource of about 250,000 ounces, but significantly higher grades of 2.66 gram per ton. Albeit the resource was done a few years back. We don't really know what parameters were used to establish that resource, but based on the results that we've seen, we can confirm that the deposits both at Kim and Cass are definitely higher grade than what we've seen at COLOMAC. So this is that area. This is where we see a lot of potential in terms of further expansion of near surface higher grade open pit mineralization. So starting with, as I said before, these things have been drilled down to about 80 to 100 meters vertically. With our project, what we see based on today's gold price environment and assumptions that we use and our strip ratios, we think these pits can go down to anywhere from 250 to 300 meters vertically. So not only do we see a lot of potential to further expand the existing open pit mineralization at Cass and Kim, there's also a strike extension potential between Kim Cass. Again, I don't have my drawing tool. I apologize for this, but I'd like to draw a line between that connects Kim all the way down to the Albatross. That's if I could draw that line, I would show you that there it is. I'm glad that somebody's doing this for me. So that's anywhere from 7 to 10 kilometer trend that starts at Albatross, which is a target, and I call it a trend. And it goes towards Cass and then further towards Kim and to the north of Kim as well. That's kind of the strike extension of Kim Cass. And one of the theories that we're testing here is we're seeing a lot of pinching and swelling of the mineralization from Cass to Kim and then further to the southwest of Cass towards Albatross. So that's kind of the theory we're testing here. If we can find another Kimcast or two along this 7 to 10 kilometer trend, we see clear line of sight towards anywhere from 750,000 ounces to 1 million ounces of resources. Albeit that's a forward-looking statement, a bit speculative, but that's kind of that's exploration. That's the theory and that we're testing here, right? And as I said before, we're seeing better grade mineralization here as well. And I guess I should, before I move on, I should touch on, I kind of already touched on this as well. This is an area, and it goes back to the point that I was making about the underground part of the story. Again, these are those type of deposits that further extend at depth. And given the higher grade nature of this, you can imagine that, if there was to be an underground resource underneath the pits that we will eventually establish here, we're very confident of that. The underground resources would be higher grade than the grades that we're seeing at COLOMAC. So based on some of the early estimation that we've done here, any underground resources at Kimcast would be anywhere from 3.5 gram to nearly 5 gram per ton range. So that's another exciting part of this, but that's a bit further out as we start. Like right now, our focus has been to further identify and expand the open pit part of the resource. This is just to further show what when we talk about higher grade stuff, this is the best hole. CM2112 at the cast is the best hole that has been drilled to date on this zone, about 7 gram per ton over 51 meter core length. So when we talk about some of that higher grade, the higher grade parts of or the center of the mineralization, that's what we're talking about. That actually includes 11.31 gram per ton over 20 meters. So those are the kind of holes that I know. I even get excited about the market, especially the retail market. Sometimes gets excited about, and it's good to see. And you can add a lot of ounces to your existing resource. But for the most part, as I said before, we're always looking for that 2.5, 3 gram per ton over 10 to 20 meter core length. Those are the kind of holes that get me even more excited. As long as there's consistency along strike or at depth that kind of get us to that consistent resource expansion of our existing resources. This slide represents the latest results that we've published from the cast zone. This is the western extension. So whatever was there historically at cast, we further extended it to the west of it. So we had some strike extension. This is why I say we think we will have, once we come up with our year-end resource, these are some of the areas that we will have added to the existing resource that was there historically. And again, some really good intersects, 3.21 over 20 meters. That's the kind of stuff that we want to see. 1.5 over 32 meters. Very consistent along strike. Resource expansion type of drilling and results that will further enhance the existing mineralization and resources that are sitting at the cast zone. And finally, just along cast, we talked about testing that 7 to 10 kilometer trend, starting with Albatross and then towards cast, and then between cast and Kim, and even further to the north. Albatross is an area that had shown some really good prospects in terms of really grassroots exploration, sampling that had been done. We wanted to do some really shallow, really grassroots exploration drilling there. Very early, we got to this really late in the season. And again, we've published this already. We think we have a new discovery in our hand today, 1.37 gram per ton over 14 meters, including 5.37 gram per ton over 2 meters. Very early on, but I can tell you that we've definitely found this extended ab mineralization from cast towards southwest Albatross, and we definitely like the rock and the core that we see here. So I think it's fair to say that this is an area that will definitely drill in our 2022 program. And again, this is a more simplistic view of our our property and some of the targets that are sitting, some of the higher priority targets that sit on our property. All the boxes in A represent targets that have been drilled or have resources on, and the yellow targets are some of those grassroots exploration targets that either require some testing or we did drilling this year. So I can tell you that we drilled a JPK target this year. We did some drilling on Lori Lake. We drilled Fishhook Zone. As I said before, we drilled the Albatross target with really good success and really good results that we've seen from there, and we hope to see even more into the new year. And a lot more of this to come. I mean, we're going to do a lot more grassroots, exploration type of work in our 2022 program. I think something that's really important to me and the rest of the team is to make sure that, we continuously look at the entire property. I mean, if you look at even this year's program, include all the work that has been done in the past, about 35% of our property has just been, basically studied. So a lot more room for expansion, just not just, at near surface targets that haven't really been tested in the past, right? And then, of course, something that we'll start talking about in the new year as well is the underground part of the story that, we've kind of, I don't want to say we've neglected it, but, our focus has really been to try and increase the open pit part of the resource, because that's what I think can get us to a PEA a lot faster than perhaps starting to look at the underground part. Because the one thing that comes with identifying near surface open pit mineralization is the shallow drilling and less capital that's required to get there. And finally, if I can kind of summarize my thoughts, and we've talked about our 2-year aggressive program, that 2.5 million ounce 2 gram per ton target of open pit resources is what most of the work that we do within our company right now in terms of operations and exploration is to get us to that point, because we think that can be the basis of a very robust and large scale PEA that kind of moves the needle for all those stakeholders that we talked about within the Northwest Territories, and also our shareholders as well. And then from that point on, obviously start looking at our social license, making sure that we do all the environmental work that we need to do to get our permits in place, while we're continuously exploring our property and all our targets and our assets, to add additional resources and get it to a feasibility stage. From the time that we do a PEA and until we deliver a feasibility, one of our internal objectives and targets is to make sure that we deliver a feasibility that is, at least in terms of value anyways, 50% higher than the PEA that we deliver to the market. And ultimately, we're doing this with the goal of developing, building, and reaching commercial production towards that first gold pour. So although it's I'd say anywhere from 3 to 5 years out, this is what we do. This is what mining is. This is what exploration is. This is something that I get up every day to do. So with that said, I'll leave it there. I want to thank you so much for your time, and happy to take any questions that you guys may have for us at Nighthawk.
Well, and there are a few, Keyvan. Thank you very much. You've done something here. The Q&A column has been quite active while you've been doing your great presentation, a really thorough overview of the company, and we hear your vision. We always appreciate that. That's why we're here at VID conferences. So thank you for your offering, and we'll jump into a few key questions here. I want to ask you, let me just start with the targets that are mentioned here. Ryan asks, given the number of exploration targets, Keyvan, within the COLOMAC area and across the rest of the property, where do you expect to focus the majority of your 22 drill program?
That's a good question. So at a very high level, I mean, there's still a lot of results pending. A detailed budget or program for next year is going to depend heavily on the results that come back in. Some of the grassroots stuff that we drilled, kind of discovery type, we're still waiting for a lot of results of those. So whatever answer I provide here is going to be very high level. But I think it's fair to say that COLOMAC still has a lot of opportunities, not just near surface, but also underground part of the resource, especially when you saw at GOLDCREST. I believe there's some really higher grade pockets that definitely justify additional exploration and investigation. Kimcast, we talked about Albatross, Kimcast, those are and that's 7 to 10 kilometer trend within the Kimcast property. We still have results coming out from Kim, and also a little bit further to the south of Kim, we did some drilling on. We call it Kim South. We kind of like the rock that we see there, but we don't have assays back for it. But that trend definitely justifies a lot more work and a lot more drilling. So at a very high level, I think those are the two key targets for us going forward, at least for the next year and a half too.
Terrific. Thank you, Keyvan. Next question here. So in your comparison to Marathon Gold, how do you factor in your remote location?
That's a great question. I mean, they obviously have access to all-season highway and power. Whereas in our case, I think for us, size and scale, something is can offset that, and also grade. I believe if you look at their feasibility study, I think their grade, the average mill grade is about 1.39, 1.4. Whereas in our case, COLOMAC itself had history of mining at about 1.7 gram per ton, and with some of the other targets that we've talked about, I think the overall head grade of the project can be in the 1.85 to 2.15 gram per ton range based on what we see right now. Obviously, that's a little bit more speculative, and it still requires additional resource expansion and discoveries and whatnot. So that's the way I see the offset between our project and theirs. Overall, I think the size of our project and the grade of our project definitely can deliver better economics and also better throughput in terms of, the project that we can deliver in the form of a mine plan or a PEA. What we're looking at is, and to your point and to the person that asked the question, I think that's a really valid point. When you have access to infrastructure like all-season highway and power, you can afford to take a bit of a hit in terms of production profile and throughput. Whereas in our case, 200,000 ounces a year, production profile is kind of the minimum that we're working with. That's the size of the project that I think really moves the needle in terms of economics and all the stakeholders that come into play with respect to a remote site.
Terrific, thank you, Keyvan. Next question here: where do you see the grade improvements coming from?
Yeah, so I think Kimcast is an area where we think the head grade can get a boost from, and the more ounces we can find along that trend again that I talked about, Kimcast, in between Kimcast and any further expansion of the resources along that trend, we see a lot of opportunity and potential for additional grade from there. And then there's other satellite targets. One thing that we haven't talked about is some of these other deposits that were drilled and have already have a resource on, like the Madi Lake is. If you look at the global resource base right now, we have about 120,000 ounces of 5 gram per ton underground resources, but that thing comes right to surface. So there's opportunities in that area as well. And again, it's important to look at some of those, like discovery type of, deposits or targets, I should say, because, for example, the Madi is a great example, but we talked about JPK as a, iron formation hosted rock. Those are the areas that we see. We can potentially see higher grade mineralization. That's why I think it's important for us. I guess the point I'm trying to make is to make sure that we allot a large part. And when I say large, anywhere from 25 to 35% of our exploration to grassroots greenfield type of exploration to look for some of those discoveries and targets. Near term, Kimcast and the Madi is where I think the grade gets a lift. But we still have to go and look at that 60% of the property hasn't really been touched or drilled. To look for additional higher grade mineralization.
Okay, thank you, Keyvan. Next question here from Ryan. With respect to the ongoing drill program, how much is focused on adding near surface or open pit ounces versus testing or expanding underground targets?
Okay, so this year has been mostly, I would say 98% has been open pit, near surface. Most of our holes were down to about 200 meters vertically. And that's not the extent of the open pit. I think depending on grade, the pits can go down to 250, 300, maybe even 350 meters vertically, depending on how far we want to stretch the strip and all those good things. But yeah, look, the underground, again, we'll have to look at the resource estimate at the end of this year. Yeah. And then in 3D, as you would start planning our holes for next year. I think it's fair to say that some of the drilling that we'll do this year will be to further extend the mineralization at some of these targets, especially some of the higher grade stuff. So I think for me, Kimcast definitely justify, again, very high level. Kimcast do justify some deep drilling just to show the market that, hey, look, here's the open pit part of the resource, but here's how far we can extend the mineralization vertically. But other than that, obviously COLOMAC has about 2 million ounces of 2 gram per ton underground material, but there are higher grade sections within that 2 million ounce. So there are some areas that definitely justify going back into and doing additional drilling. But again, this is very high level. We still have to go through the detailed planning for next year's program.
Understood. Thank you. And we have time at this point, Keyvan, for a couple more questions. This one from Donald. He says, this looks like a 20-year exploration project, not a 4 to 5 year development story. Are you not putting the cart before the horse?
Yeah, I think that's a fair point. I mean, I'll take that jab, no problem. But and I think some of that has to do with legacy and the fact that the company has, it's been slow progress.
Yes.
But look, the best way I can answer that is that, again, between myself and Richard and the rest of the team that we're starting to build out, we come from a mine building background. So speed is super critical. I can only say that, look, we have had 1 year of drilling. We managed to double the exploration program from any given year in the past. And we're actually even looking at growing it by another 25-30% of doing 100,000 meters next year. When you look at the year-end resource that gets published in Q1 of next year, I would like the viewer to perhaps rethink that question again, maybe shoot me an email, and happy to have a conversation with them as well. I guess for us, it's like we've kind of been in this penalty box as Nighthawk as a whole.
Yes.
Particularly after the resource update of July 2020, and the market is really waiting for us to see what we can deliver. But I talk about the 2.5 million ounce open pit target, and I didn't touch on this really during the presentation. We don't necessarily have to get to 2.5 million ounces.
Okay.
I think we'll be at 1.7 at the end of this year. But there is a number between 1.7 and 2.5 where we say, okay, perhaps we can sacrifice some of our internal targets and objectives in terms of what we want to deliver in the form of a PEA and come to market with the PEA sooner. The timelines for a mine plan or economic assessment are the latest is middle of 2023, and the earliest could be middle or Q3 of 2022. Depending on what our resource looks like at the end of the year in Q1. So again, stay tuned. But speed is definitely of importance to us, all of us and the team, and we want to be a lot more aggressive with the way we advance this project further.
Fair enough and well said, Keyvan. Thank you for that. I can't help but notice the name of the company is Nighthawk Gold Corporation. So let's step back and look at the bird's eye view here for a moment. And the question comes from Joanne. What are your biggest challenges, in your opinion, now and in the future?
Yeah, that's a good question. Like with a company like exploration, I think one of the things that I don't lose sleep over it, I don't want to say, but the macro environment in terms of where the financing and all that stuff comes from. But having said that, I just want to make sure that I end on a more positive note. I think I'm very positive on the gold market in general, and there's lots of discussions around inflation and debt monetization and all those things that I think kind of set up gold really well for at least the next year and a half, 2 years. So I'm fairly bullish on gold, and I think the market will be there. So although always a challenge, something that most CEOs of an exploration company think about. Other than that, I don't really see challenges in terms of our project. We have a plan, we have a strategy. And we kind of have clear line of sight as to how we get there, right? We just have to execute. One thing I would like to see is obviously we want to engage a lot more with our local communities and our stakeholders. And COVID has made that hard. I mean, we haven't been able to get into the communities on foot and listen to people and listen to their concerns. So we're looking at perhaps doing that virtually if the situation stays the same with the health crisis that we're going through, all of us. But that's been one of the tedious things in terms of not being able to get out there and talk to people. So we'll try and address that over the next couple of months, making sure that we are talking to our local communities and stakeholders.
Very good. Thank you for that. Why don't we leave with this question and look ahead one more moment here, Keyvan. What do you see as the upcoming catalysts for investors to pay attention to?
Okay, so that's a great question, and it's probably a good way to end it. We still have a lot more results coming from our 2021 program. I kind of touched on this already. A lot of the issuers like us have had a lot of delays from the labs. So I would look for some of those press releases that come out over the next several weeks.
Okay.
But we will consolidate all of that with a resource update that should be public. I'm going to say Q1 of next year. Again, ideally we would like to have had it out early next year, but again, we've had a lot of delays. But the big catalyst for us is going to be our resource update in Q1 of next year.
Okay, that's a great thing to look for the audience. I can promise you this, we'll be watching the company closely, Keyvan. It's been a great presentation. I know our audience is very grateful to have a direct line to your vision. And I thought the questions were quite solid all the way through. So I will say thank you for joining us at VID5. Again, sponsored by Laurentian Bank Securities, Nighthawk Gold Corporation, everyone. Keyvan, thank you for your time.
Thank you so much. Thanks for having me.